What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about possibly the best company in the world. Possibly, right? Because this is a really well run business and it's under the radar. Not a lot of people are talking about this one company because what I've seen from all the research that I've done, this is the fundamentals, the actual numbers are just perfect. I mean, there's not a one single thing that I would change about the company's fundamentals. That's how crazy it is. So hope you guys enjoy this video and find it helpful. This is going to be a completely brand new company, brand new stock. We haven't really talked about this at all. I think I've done maybe one video on this in the last couple of years, but yes, I think we need to talk about this company more. So as always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. I know the suspense is killing you, but subscribe and join our Discord if you want to. 60% annual discount is available till the end of this month, so we'd love to have you on board in our money investing community. So the company that we are talking about today is going to be Copart, ticker symbol CPRT. Now, Copart has gone up over 33,000% since 1995, since it's pretty much gone public. And every single year, I mean, you'll notice that it has its ups and downs, but the stock chart has a consistent uptrend all the way to the top right, making higher highs, higher lows, and now trading at an all-time high at well over $81 per share. Yes, Copart. It is an online auto auction marketplace. And who would have thought that this company can produce such consistent and such amazing results when you look under the hood, the actual numbers themselves. So in a nutshell, they provide a marketplace for buyers and sellers, right? So you can pretty much have this auto auction. You can bid and you can have your ask. You can pretty much source vehicles, whatever it is, and that's how they generate money. How it works: nearly 200,000 cars, trucks, SUVs, motorcycles, and more for sale. A better way to buy and a global leader. Copart is a global leader, 100% online car auctions featuring used, wholesale, and salvage vehicles as well. And again, this is how the process works. So view before you bid, expensive inventory, great deals, and daily auctions that are also running on the platform. And they are going to be reporting their third quarter fiscal year 2023 numbers today. They're going to actually report the numbers today after the markets close. So at 4 p.m. Eastern, after markets close on May 17th, 2023. So on Wednesday. So they're going to report their numbers today. But when you actually take a look at their numbers here, this is just nothing short of perfection. I mean, every single year they've been able to grow their revenues from, they're coming from $1 billion to over $3.5 billion in 2022. And just take a look at these bar graphs. Like, what? Who would have thought that this company would be able to produce some numbers here? $470 million to over $1.6 billion in gross profit. Just look at that operating income. $310 million to over $1.3 billion. That's like a 4x growth in the last, 9 years for the company. That's phenomenal. This right here is going to be the net income. Just amazing bar graph. Look at that consistency, right? Not a lot of companies can actually do that. This is extraordinary, right, to say the least. I'm not overstating the fact that the company is extremely profitable, just the idea that this is very difficult for companies to do. Consistently grow their net income, one of the most challenging things that businesses can achieve. $180 million to over $1 billion, so that's another 4 to 5x growth here. And take a look at this, share count, very stagnant, very stable. So they're buying back shares every single year by about 1%. I've done the math here, so $519 million gone down to $482 million. So not only is their revenues and earnings and profitability is moving in the right direction, their diluted shares outstanding is also going down, which is also moving in the right direction. They're buying back shares every single year. Not to mention, like, look at this, 45% gross margins. We're looking at net margins at almost 30%. So for every $1 in revenue the company generates, about 30 cents trickles down to the very bottom line as profit, as actual net income. Return on common equity 23%. Return on capital, 17%. Return on assets, 18%. Just across the board, it's phenomenal. This right here is their balance sheet. Like, oh my God. I don't even have to go over this, but just come over to the balance sheet here. Cash and cash equivalents, $1.6 billion. Do you want to know what their liabilities are? Their total liabilities, $718 million. Not just the debt, but entire liabilities. They can literally pay down all their liabilities and be debt-free in one single day. They can literally just use all their cash and pay down all the liabilities twice. Not once, but twice, more than twice. Not to mention, of course, their total assets are sitting at almost $6 billion. And we'll calculate what their net liquidation value is going to look like because, man, they've got plenty of cash and little no debt. Current ratio is over 5, quick ratio is over 3, debt to free cash flow is under 2, and of course they've got a negative net debt. So again, when I say that this is probably one of the most well-run, highest quality companies out there, it's for a reason, right? You can see all the numbers right in front of you that it makes a lot of sense, and it's just, A plus without a doubt. This right here is going to be the earnings expectation, and it's not like it's stagnant. It is expected to continue to grow earnings by about 18% compounded annually. So this can be considered as a growth stock because analysts are estimating about an 18 to 20% growth rate for the company over the next couple of years here, and revenue also expected at well over 9 to 10%. If you come over to the actual earnings forecast here, you'll notice that they are expected to grow from 223 every single year to over 336 by 2025, and revenue also expected to increase over the coming years. So it's not really like a safe value stock, but it is considered to be a growth stock because the expectations are there, and they have also a very strong track record of actually growing their numbers. Now, of course, the only thing that is not going to line up is the valuation. Right? Obviously, when the picture is too perfect, when it sounds too good to be true, it probably is. And in Copart's case, it is because the valuation is a little too high up there, obviously trading back up to all-time highs. And it's not a surprise. Markets see that, the quality of the company that it is, and that's why they're bidding it up. And it's trading at well over 10 times sales, a little bit over 35 times earnings, and a little bit over 27 to 31 times cash flow, and enterprise value to EBITDA trading at 23 to 24. So investors see the quality of this company and hence the higher valuation being assigned to this stock. But that doesn't mean that we can't analyze something for ourselves where this company would be viable for us personally, for me personally, like where would be the intrinsic value. So now we come over to the Excel spreadsheet, and that's going to be over here. And again, this is going to be their net income from 2022, a little bit over $1 billion, share count at 482 million. And in the past, they have reduced their share count by about 81 basis points every single year. So I'm going to plug in negative 1%, as they accelerate a little bit of the higher share buybacks in the future. And when it comes to the growth, they're pricing in about an 18.5% growth over the next 3 years, 2023, 2024, and 2025. I'm not going to go with 18.5%. I'm going to go with a little bit more conservative numbers, 16%. And P multiple, obviously trading at 35, 37. I'm not going to go that high. Let's just go with 20. Discount rate is going to be 12%, 10% margin of safety, and we get a fair value or an intrinsic value of just under $51 per share for this quality business, and a market price of $82. That means another 37 to 38% downside needed in order for this stock to make sense. And you can see that the price earnings multiple, how it's going to progress, it's going to be at 22 times trailing, 24 times forward, and then come down to 23, 22, 21, and then finally settle at 20 by the year 2027. And the price target by then is going to be closer to $100 per share. This right here is a new table that I've actually created for our analysis moving forward. So this is an additional piece of analysis that we're going to be doing for most companies in the future. And that is basically calculating the NLV, which is the net liquidation value. And what this calculates in a nutshell is basically trying to understand if the business was basically sold for the assets, how much value can we get, right? What are going to be the proceeds from the sale of this business? So cash, I'm only taking into account 4 to 5 different things in the assets. I'm not going to account for intangible assets. I'm not going to account for operating lease right of use. I'm not going to account for goodwill. I'm not going to account for anything that cannot be materially extracted in terms of value for the business, right? I'm only accounting for hard cold cash and assets, tangible assets, physical assets that we can actually account for. So cash, 1.6 billion, accounts receivable, 765 million, inventory, 52 million, and property, plant, equipment sitting at 2.6 billion. And this is what's called a recovery rate, right? So we're basically taking into account how much can we extract from that particular asset. So for example, cash is cash, so 100%. Accounts receivable, I'm accounting for, let's say that they get back 50% of their accounts receivable. So other 50% is going to be written off. And inventory, let's say that they only sell 25% of their inventory, and property, plant, and equipment, let's just say that 100%, because that's obviously physical asset, that's going to be building and land and all those different equipment. There's going to be some depreciation involved with equipment because it's property, plant, and equipment. So maybe we should go a little bit lower here. We should probably go with 75% just to be on the safe side. And nonetheless, the actual net liquidation value sits at $3.3 billion for this company, or just a little bit under $7 per share. So that's kind of like the baseline, right? That's like the worst case scenario for this stock, obviously. But I don't think they have to worry about any of that because it's just been absolutely incredible in terms of growth, in terms of the chart, in terms of the revenues, the numbers. And again, I'm kind of surprised that this, as an auto vehicle auction marketplace, is able to do so well in terms of their numbers here. Again, you can see that in the bar graph, just phenomenal. Every year, profits growing, revenues growing, margins are expanding, and it's trading at an all-time high. So what I would do is I would simply just put it on my radar. I would keep it on my watch list, create some alerts, and if and when it actually does drop down to the support, which by the way, it wasn't trading at that support for a very long time. So in June of 22, it was trading at literally at $50 a share. And that's really where my, I think, intrinsic value ends up, right? So $50, yep, so $51. It was trading at that level before pushing right back up. From those levels, it's up close to 60% already. So that's going to be the price point I'm watching. A very strong support here, and obviously trading at a new all-time high at the moment. So let me know your thoughts down in the comment section below. What do you think about Copart? Do you actually own it? If you do, congratulations. It's, again, great company. Props to you for figuring that out. But again, let me know your thoughts down in the comment section below. As always, if you enjoyed it, find it helpful, make sure that you drop a like and of course subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing, and I'll see you all in the next video.